Hi, Todd VanDenburg here with VanDenburg Capital Management and another Uncommon Sense update. Now, if you'd have asked me on Friday what I might be talking about today, it might have been Bitcoin. You know, Bitcoin went from about $20,000 each to under $10,000 each in just a handful of days. And I was actually speaking about this at the Valley of the Moon Rotary on Friday, talking about how Bitcoins work and what they are, where they came from. And I really thought that might have been the news. But in the Senate, the Republicans and the Democrats on Friday couldn't come to a meeting of the minds, and so they couldn't pass a short-term spending bill, and that meant that at midnight on Friday, the government technically shut down. As I record this video, though, the Senate has now passed a short-term spending bill, and that's going to go over to the House and get rubber stamped. So tomorrow the government will be back open, and it will be business as usual for the next handful of weeks while the House and the Senate negotiate whatever they're going to negotiate to get a longer-term budget in place. In other news, the 10-year Treasury did climb above 2.6% for the first time in a while. We think that's in anticipation of rate increases by the Treasury, the Fed, in the next several weeks or months. And pretty normal stuff, and at 2.6%, nothing to worry about. However, if you are a bond owner and a bond holder, you have been paid in dividends and some appreciation here in this last several years, but you really got to be wary of what's going to happen to those investments if the Fed does raise interest rates at least 3 times, as it has talked about this year. So be on the lookout for more news on bond investing here as the Fed releases more information. And even in spite of a potential government shutdown, the markets were still up about 1% last week. And as I record this video, the market has closed for today, and the markets jumped up right after the Senate passed its spending bill. So what we're really looking forward to here is in the next several weeks, we're going to start seeing some of the money as a result of the new tax rates appearing in people's paychecks. And that, in our view, is really going to be the driving factor for the rest of this year. I did some analysis back in the napkin, and if you compare somebody, a single person who makes about $55,000 a year, and you look at them under the old tax rates and the new tax rates, these new tax rates amount to about $200 a month extra spending money in their pockets. So what they do with that is really going to drive what happens to the economy. If they spend some of that money, that means businesses can increase revenues. Increased revenues often means increased profits, and increased profits often leads to increased share prices in the stock market. So we're going to be looking at this data really closely in the coming weeks and months. We think you should too. It's really important stuff. It's going to drive the stock market performance likely for the rest of the year. So smooth sailing ahead, at least as far as we can see right now. The government is open again, at least for the next few weeks. And that was your update. So I hope you enjoyed it. If you did, give us a like, give us a share. We certainly appreciate it. And look for another update from us in the next couple of days. Thanks for watching.